Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 23rd day of June, 2017, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen in the precious metals markets, with gold staging, I believe, a pretty dramatic recovery since it has been falling from about $1,300 per ounce. Gold today closed up about $8.40 to close at $1257.80. That's just off of a high of $1260 and a low today of $1250.60. We did, in fact, enter a long position. We got long on Wednesday afternoon here in Honolulu, and we got long roughly at $12.52 with stops in place. Of course, during the chart section of the show, we will detail our rationale behind the trade we just put on. We'll talk about stop placement and begin our discussion about our current exit strategy. Silver also traded higher on the day, gaining almost a full percentage at $16.67, and that was a net gain of about 16 cents on the day. Platinum closed higher, palladium closed lower on the day. There can be no doubt gold staged a dramatic recovery. Consider this: if gold closed at the low of this week, which sits right at around 1242 right in here, the result would have been a third consecutive week, obviously, of lower closes, but a pretty sizable drop in the market and a continuation of the bearish trend that really has become the prominent feature in the market since selling off after the market was unable to take out prices roughly at 1300. However, the real news is that we did see a dramatic recovery, and although we're looking at a very, very small bodied candle, nonetheless, it did close higher than it opened, that by virtue of it being green, and it effectively traded off the lows achieved midweek. Now, it was that dramatic recovery, which really began on Wednesday of this week, that prompted our current trade, in which we went long at $12.52. And to illustrate the details of that trade, we really have to pull up our daily candlestick chart. On this chart, it's quite evident this market had been in a free fall ever since a failure to go above 1300. Midweek, I should say Tuesday of this week, the market actually broke below the 61% retracement, which is a retracement of this current rally from, call it, 1212 to 1300, and it stopped just shy of the 200-day moving average, which is this dashed line. Then on Wednesday, this being Tuesday's candle and this being Wednesday's candle, we had an equal low, and that showed us that we had really the first signs of a consolidation in the market and a potential bottom. In the afternoon session on Wednesday, as this market began to trade higher, we actually put out a trade alert recommending that our subscribers go long, and we got in right here at 1252. The market did trade higher on the day, but closed lower on the session. 1252 was our entry price, and that takes us to the activity today. And the activity today is obviously a solid day in which the market gained well over $8, closing just below the 50-day moving average with a high that matched the 50-day moving average. The first thing about the trade that we just entered is it was the fact that it held this particular price point that signaled a potential bottom. When we look at the candlesticks, however, it gave us more insight, because these two candles together form a pattern called tweezer bottoms, simply put, equal lows. But more importantly, this red candle, these two candles here, as well as this last green candle here, actually form a tower bottom, which when found with other factors can be a very insightful pattern. And that's why we had the tweezer bottoms, the tower bottoms. We held the 200-day moving average, and that is really the factors that cause us to implement and trigger a buy signal. We are now long at 1252. As far as the stops go, our current stops are just below the 200-day moving average. 200-day moving average is now set at 1240. That's going to be a moving target, and our stops are just below 35, but we will look to tighten them up at the beginning of the week. Obviously, let's maintain maintain our current long position as well as our current stop. In other markets that we follow, U.S. equities, aside from the NASDAQ, was rather flat today. Dow closed unchanged, down about 2.5 points to close at 21,394. Over to the Standard & Poor's Index, that closed up about 4 points at 2338. Again, I'm going to check that in the unchanged category, but the same cannot be said for the NASDAQ. NASDAQ actually closed up 28 points to close at 62.65. Lastly, a small recovery in oil. Oil did close slightly higher on the day, closing up about a full percentage at 43.17, and the dollar index was lower by about 1/3%. And traders, as far as the dollar goes, yes, it has been under pressure, but most recently, we can say that the overall characteristics of the dollar is it's been caught in a pretty narrowly defined range, with the highs around 97.50 and the lows around 96.50, so about a 1% range in terms of the dollar index. Now, in terms of its effect on gold, it has provided tailwinds for gold to move higher. But, for example, on today's trading activity, when we look at physical gold, that was up $6.60. Out of that $6.60, $3.50 was directly attributable to normal trading or buying in the market, with the remaining $3.10 gain being directly attributable to a weakening U.S. dollar. Traders, there's absolutely no doubt. Gold staged a very, very nice recovery, and by putting the trade on midweek, we were attempting to bottom pick, but we went into bottom picking with quite a full toolbox. We utilized not only Fibonacci retracement, but we compared current pricing to a 200-day moving average. That was the first thing we utilized to give us an indication that we were at a price point that is a logical price point to look for a potential bottom in gold. However, it was the candlestick patterns that we talked about throughout the week and mentioned a little bit on the show that really gave us that trigger to actually go in and enter the position from the long side. Tweezer bottoms and tower bottoms were the primary patterns that guided us into this current trade. On Monday and Tuesday, we will go into more detail about our exit strategy. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.